What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, I want to answer the question, what is the infinite banking concept? And I really just want to share with you guys how I've come to understand it since I started going down the infinite banking rabbit hole. It's really exciting. There's a lot of great benefits that you get from this financial strategy. It's by far one of the most powerful financial strategies I've ever come across, and I'm so grateful that I discovered it and also that I learned it the way that I did, and I actually did my research. Because there's a lot of really bad conflicting information out there around this strategy. So in this video, I want to give you guys a really good foundation and understanding about what the infinite banking concept is, how it works, and also share some real life examples, ways that I'm utilizing my policy right now to kind of bring it home so you can kind of see it in action a little bit, right? Because it is awesome once you understand it and you utilize it properly. All right. So I have, I'm going to go ahead and share my screen. I have a little slideshow that we're going to go through just to keep us on track, and we'll have some fun. All right. So what is infinite banking? All right, so here's my kind of long-winded definition of it, but there's so many awesome benefits that you get from it that there's a lot involved, right? So it's hard to put it into like a shorter definition, but it's a financial strategy that involves becoming your own bank via a max-funded, dividend-paying whole life insurance policy, which you can then borrow against to acquire assets and make large capital purchases, all while earning uninterrupted compound growth, interest, whatever. All right, so there's a lot baked into that. We're going to break it down, but that's if someone were to ask me, like, hey, define infinite banking right now in one sentence, this is what it would be. So there's two main parts to infinite banking here. All right, we've got the whole life dividend paying whole life insurance contract that we set up with a mutually owned participating life insurance company. All right. So the dividends get passed on to us. Okay. So we have the whole life insurance contract, which is the vehicle that we're using to implement the infinite banking concept itself. So the infinite banking concept is the strategy, and the vehicle that we're using is the whole life insurance contract. And then the implementation is basically it comes down to the driver of that vehicle. I'm going to give you an analogy to easily understand this. So imagine we take a vehicle, a car, all right, and I've got to get from point A to point B, all right. Now, when I drive that vehicle, as if I follow the rules of the road, I don't speed, I follow the speed limit, I'm not distracted with my phone, I'm paying attention, right? I'm going to get to my destination, right? But if I drive the same vehicle and I'm under the influence, or I'm on my phone and I'm speeding, 50 miles an hour over the speed limit, and I'm not paying attention, am I going to get to my destination? No, I'm going to get into an accident. Does that make the vehicle bad or wrong? No, it's just a vehicle, right? But it comes down to how we use it, how we implement it. That's where the driver comes in, which is us, the policy holder, right? And how we utilize the policy in our lives that determines whether or not it helps us reach our goals. All right, because we get a ton of benefits in and of itself from the whole life insurance contract, but when it comes to infinite banking, that is a whole other story about how we actually utilize the policy in our lives. Okay, so there's two keys to success with infinite banking. It kind of segues into here, into the next slide here. Two keys to success that I've just kind of condensed everything into, just based on my experience so far. There's two keys to success with infinite banking. Is number one, you have to fund the policy properly, guys. Okay, the way I typically, what I usually recommend, and I've done training on this, I'll link it down below on when the best time is to start your policy, how much money you need, etc. You need to put a lump sum in the first year. It's called front loading the policy. All right. So for example, with my first policy, I set mine up to put in $25,000 per year. Okay. However, the first year I put an additional $95,000 in that I had saved up. So my total first year, that was basically my lump sum. My total first year was $120,000, and then I'm putting in $25,000 per year after. Okay. But what this does is it provides sufficient capital in order to implement the infinite banking concept. As an example, if I start my policy with $200 per month and I don't front load it, okay, well, I put $200 in and I started a policy. That's great. But how much like how much money do I really have access to? Like what can I do with that $200? Actually, you wouldn't even have access to 200. You have access to a portion of it. But my point is if you don't sufficiently fund and capitalize your policy, you're not really able to take full advantage of what you can do with the infinite banking concept. So it's important to fund it properly with a lump sum. You don't have to do 95,000. You could do 10,000, and then maybe your premium is $2,000 per year, whatever. But it kickstarts the policy. It kickstarts that compound growth, and it gives you a sufficient amount of cash value that you can borrow against to begin implementing the infinite banking concept. All right. And then obviously you want to make sure you're putting in enough annual premium. There's not really a minimum to this, but again, it comes down to what your goals are, how much you're able to save, because you want to sufficiently capitalize your bank. I mean, that's basically what we're starting here is we're starting our own banking system with these policies. So you want to capitalize it as best you can. Now, key number two is how you treat or use your policy. This goes back to being the driver of the vehicle, right? The infinite banking policy, the whole life insurance policy, is the vehicle. We are the driver, okay? So the first thing I always like to point out with this is always pay your policy loans back, because essentially, like I mentioned in the definition, is we're borrowing against our policy to make large capital purchases, to take advantage of investment opportunities. And I'm going to go through some specific examples here in a minute. So we're taking policy loans. We want to make sure we're paying those policy loans back. You'll hear people talk about how you don't have to pay back your policy loan, which is technically true because the death benefit will cover it. But when it comes to the infinite banking concept, we absolutely want to be paying back our policy loan. Otherwise, we put the policy at risk of lapsing. All right. You want to think long term. And I'm going to show you the first example using this in my life. I'm going to show you why it's so important to think long term with these policies. When you see when I go through the example, it's going to make sense. But this is a long term financial strategy, guys. This is not about building wealth in the next 90 days or the next 5 years or whatever. Can you start the wealth building process? Absolutely. I'm going to show you some examples of that. But we've got to think, when you set these policies up, you're thinking long term. We're thinking 40, 50 years down the road, or depending on how old you are. Right, I'm 35, so I'm thinking about when I'm a part of setting up this policy is me thinking like when I'm 85, 90 years old, what is my financial what do I want my financial situation to look like? What options do I want to have available to me? All right. Third here is use your policy responsibly and productively. Ideally, we want to use our policy to build wealth, meaning we want to try to get a higher rate of return with the opportunity that we're using the policy loan for than what our policy interest rate is. As a quick example, if I were to borrow against my policy at 5.5%, but I can make 10% over here, does that make sense? Well, yeah, because we're making more than what we're paying on our policy loan, plus our cash value is still continuing to get that uninterrupted compound tax-free growth, right? So we're kind of making money twice there, right? But I've seen videos that talk about using like putting all of your money into the policy and then borrowing against it for all of your expenses and then paying it off and blah, blah, blah. Like, it's just, you got to be really, really careful with that stuff. You don't want to over leverage your policy. You don't want to be going on shopping sprees and buying all kinds of crazy stuff that you otherwise wouldn't purchase just because you have an infinite banking policy now. We want to use it in a productive way that's going to help us reach our financial goals and build our wealth. That's ideally how we want to use it. Now, it doesn't mean you can't use it for vacations and creating memories with your family and stuff like that, because it does help eliminate opportunity costs, lost opportunity costs. But again, you want to make sure you're using your policy responsibly and productively to build your wealth. Okay. All right. The next three are just some things that I learned from the Nelson Nash Institute. Shout out to them. Excellent resource. I will link them down in the description to a free like mini course that they have on infinite banking. It is awesome. I highly recommend you guys go through it. These are a couple of things that I learned from them, though. Just to shift the way we think about these things is the behavior of the policy owner is more important than that of the insurance company or even how well the policy is designed. And I would agree 100%. That comes back to my third point there is using your policy responsibly. This is a vehicle, guys. It comes down to how you drive it, all right? Next, we use it to finance all of our major purchases, investment opportunities, expensive emergencies, right? These policies act as phenomenal opportunity and emergency funds. So couldn't agree more. And it's a strategy for the average American family to take back control of their money and a large portion of the banking functions in their lives. All right. And the best way for me to explain it is to provide some examples. But first, I just want to give you, if I were to give you a step-by-step layout of how infinite banking works real quick, this is what it would be, is you fund your policy, okay, using, we're doing dividend paying whole life insurance policies, guys, not IUL, not variable IUL, variable IUL, variable UL, variable life insurance, whatever, you know what I'm saying. We're using dividend paying whole life insurance, all right, so we fund the policy, we borrow against it, take advantage of whatever opportunity that has presented itself, or maybe there's an emergency that came up, whatever. Either way, we pay back the policy loan. We actually have an amortization schedule for paying back the loan. And then we rinse and repeat the process. Okay. And the best way for me to show you this is to go through some examples. All right. So example number one, I've got 3 here. All right. Purchasing a vehicle. So what's great about using infinite banking policies to make large capital purchases like a vehicle is that it eliminates lost opportunity costs. Here's what I mean. When let's go full screen just to switch it up a little bit. When I first started my policy, I was in the market for a vehicle. I first funded my policy. Okay. The car that I purchased was $28,000. I took a $28,000 policy loan. Okay. So loan against my policy. I used that to pay cash for my vehicle. And what it actually does a lot of things, but it eliminates the lost opportunity cost of what that $28,000 could have earned me over my lifetime. Okay. Because when I borrow against my policy to make that purchase, that $28,000 is still growing tax-free, uninterrupted compound growth in my policy at 3 to 5% every single year as if I never touched it, because I didn't. Right. I borrowed the life insurance company's money. Now there is an interest expense to that, but that is okay, because what I'm about to show you, when we look at some numbers, it is a small price to pay to eliminate the lost opportunity cost that you're about to see. So let me share my screen again. All right, let's go to a compound interest calculator. We're going to type in 28,000, and this is the mindset shift, the paradigm shift that you have when you start going down the infinite banking rabbit hole and you understand how this works. You start to understand how money works. These basic financial principles like lost opportunity cost and how massive it is and how much of a negative impact it has on our wealth over the long run. Okay, so 28,000. Let's do 40 years. Let's see what 28,000 at 4%, because like I said, these policies net between 3 to 5%. So we're going to use 4% here, and it gets uninterrupted compound growth. So we're going to calculate that, and look at this number, guys. Over 40 years, would the car have cost me 28,000, or would it have cost me 134,000? Right now do that multiple times throughout your life. How much is that purchase actually costing us? Okay. This is one of the amazing things about infinite banking, is it helps eliminate those lost opportunity costs. Okay. Now, like I said, you do pay interest on it. Right now, my interest rate on my policy loan is 5.5%, but it's a small price to pay to eliminate this opportunity cost right here. Right. Not to mention, I can make more than 5.5% to cover that in other opportunities, which we'll talk about in a minute. All right. So hopefully that brings some clarity on like how powerful eliminating those opportunity costs can be. It's one of the amazing benefits of these policies. Here's the other benefit too, guys. When you're making these large capital purchases, is there's no qualification process whatsoever when we have our own bank. My bank doesn't say no to me. I didn't need to fill out a credit application. Didn't matter what my credit score was. I didn't have to provide tax returns, bank statements, have a good debt to income ratio. Didn't take weeks for it to get approved or whatever, right? I had my money in 2 to 3 business days, no questions asked. I didn't have to explain what I was using the money for, because it's my money. It's my cash value that I have access to, right? So the freedom and flexibility of having control of your capital, being able to make those large capital purchases very quickly, as opposed to having this long drawn out approval process. How do you put a price on that? I don't know. So let's that's example number one. Example no, whoops, I went backwards. Example number two, consolidating high interest debt, guys. This is awesome, and I'm going to do some training on this as well. I actually did training on this. I'll link it down below. But there's going to be additional training I do over or around paying off high interest debt over the long run. But I recently utilized my policy to consolidate all of my mother's high interest credit card debt. She had 13 cards. She was paying around or over $1,000 a month. She was making barely over the minimum payments, just trying to pay them down. Obviously, that was not going to work. And so, she's paying 25, 28% interest on these things. And when I found out about it, because I had no idea, it's interesting how people kind of keep that under the rug sometimes, right? Anyways, when I found out, I was just immediately like, we're going to fix this right now, because I don't know if you're aware of this. We have our own bank. We can consolidate this. That was a conversation I was having with her. And so I took a policy loan, okay, for the exact amount for all of her credit card debt. We paid all of the credit card debt off at once, consolidated all. We cut up most of the cards, okay? But here's what happens. I mean, so many things happen with this, guys. One, my mother is no longer drowning in credit card debt, okay? Especially as she reaches retirement age. Like, do we really want to have a ton of debt like this, high interest debt, when we're reaching retirement age? Absolutely not. All right, so being able to help a family, friends, etc., like this, like, you can't even put a price on that, and it's just so awesome. But she no longer has the high interest credit card debt. She's no longer paying 25 to 28% interest on this debt. Instead, she's paying 5.5 to 6.5%, depending on where the interest rates go, back to our family bank, which then puts, like, it depends on how much she paid every month, but on average, it puts $500 to $700, upwards of $800 per month back into her pocket that she can now use towards her retirement or whatever she wants to do. Not to mention, it's absolutely going to improve her credit score shortly, because her utilization rate has plummeted now. So all of these benefits that she gets by simply utilizing an infinite banking policy, where we were able to consolidate all that high interest debt. And what's the rate of return on the money saved when you're paying 25 to 28% interest versus 6.5%? That's a huge rate of return right there. So really awesome way to utilize infinite banking. And then number three, we'll finish up here, is flipping equipment. So again, this is a real life example for me. You don't have to do anything like this. This is more just an example showing how we can build wealth, utilize our policy to build wealth. Okay, so flipping equipment, basically, it's very similar to real estate, where I have a business partner where, so I borrowed against my policy. We purchased 2 pieces of heavy equipment. We're going to renovate it and then resell it for profit. Same exact thing that you would do with real estate. Just for me, it's a lot less headache. Nothing wrong with real estate though. But here's the thing, is I'm borrowing from my policy at 5.5%. On average, we typically make, these deals typically make anywhere between like 10 to 25, upwards maybe like 30% on the deal. So does it make sense to borrow at 5.5, and let's just say it's 15, I earn 15% over here? Does that make sense to do? I think so. Yeah, because even though I have to pay interest to borrow against my policy, the profit I make from the investment opportunity over here is going to cover that interest cost. Everything else is pure profit. Plus, I continue to earn the 3 to 5% uninterrupted tax-free compound growth while I did it. On what planet does that not make sense? That is the real power of an infinite banking policy right there, guys. It's the same thing that banks do. When you deposit money into a bank and they pay you 1% and then they lend it out at 5%, it's the same thing. That's exactly what banks do. That's what we're doing with our infinite banking policy, guys. So I wanted to go ahead and wrap up with this. I wanted to just share my journey with infinite banking so far, the way I've come to understand it, the incredible benefits and opportunities that it has provided me thus far. And I'm not saying that this is right for everybody. It might not be right for you. You might not be in the best position right now to start an infinite banking policy. Whatever. That's fine. I understand that. But I want people to understand that this opportunity exists, that this financial vehicle is available to us. And when set up and utilized properly, it is unbelievably powerful, guys. It is just crazy how many amazing benefits and opportunities we get with these policies when it's set up properly and you utilize it properly. So anyways, I hope that was helpful, guys. I'm sharing my journey here, right? I'm sharing my journey, my experience, my understanding of these things, so that hopefully it helps you along your own journey, whether it makes sense for you or not, or doesn't. Either way, I hope it was helpful. If you guys have any questions, drop some comments down below. I'd love to hear your feedback as well. All right. And yeah, we'll go from there. So make sure you check out all the links in the description. Lots of good training there. Free masterclass, university, all that good stuff. And I hope you guys are crushing it. I'll talk to you in the next one. To your success, Matty Ice is out.